Good afternoon, everyone. Happy Sunday. Let's get audio check here on my end. Hope you guys are doing fantastic. Alrighty, guys, we're good to go. Hope you guys are doing fantastic. Hope you guys are having a great weekend. Ready to get back to business here for the new week. Beautiful week last week in terms of price delivery. Really easy trading if you know what you're doing. Easy money to be made last week. So looking forward to the same here this week. Do keep in mind it will be an abbreviated week because we do have July 4th holiday on Friday. So for those of you guys around the globe, huge holiday in the US on Friday, which will be a bank holiday. So do keep in mind we'll have a shortened trading week for this week. Williams, good afternoon to you, sir. Oh, only 2 spots. Oh, okay, good. Appreciate the uploads, help a lot. Thanks, Williams. Glad they're helpful. That's the goal. Going to be much more active on YouTube going forward, and especially much more once I get done with the mentorship content for those I'm working with, and then I'll really hit the gas on YouTube. Much more to come. Want to make valuable trading education accessible to everybody. I see what's out there on YouTube, and I see it could use a lot of work, so I'm gonna go ahead and help you guys out and deliver. Amy, hello. Glad you're joining. Cleo, happy Sunday. Thanks for being here. Yeah, glad to be here with you guys. Hello, everyone. Hello to you, sir. Ahmed, happy Sunday. Quarter 3 begins. Best of luck, Dylan and the Door team. Yeah, same to you guys at the Interbank crew, sir. Hope you guys are doing fantastic, and Quarter 3 will bring some amazing opportunities, I'm sure. Good luck to you guys as well, man. Cyclops, happy Sunday. Happy Sunday to you, sir. Cyber, happy Sunday, boys and girls. Glad to be here. Chris, Kevin, hello. Happy Sunday. Glad to have you guys. Is NFP this week? No, NFP is not this week. NFP is going to be at the beginning of every new calendar month. So that's not this week because it's a bank holiday on July 4th. So it'll be the following week probably. But you can just check Forex Factor and it'll have all that information. But yeah, because it's July 4th, NFP's I think going to be scheduled for the following week. Robert, happy Sunday. Thanks for your channel. Yeah, my pleasure. Appreciate the feedback. Thank you, guys. Pillow took some week off and back now to enjoy the market. There you go, man. Always got to take a step back, regroup, rearm, and hit it with a new level of focus. Love to see it. Barry, love your content. Thank you very much. I appreciate it. Glad it's helpful. Let me know what you guys want to see more of. Trader, how you doing, Dylan? Doing just fine. Had a good weekend. Easy trading week last week. Enjoyed some family time on Friday. And other than that, life is good. What's your trading schedule going to be for the July 4th week? I'm going to have to sit down and look at the calendar. Probably Tuesday, Wednesday, Thursday, if I had to say. Probably that's the days I'll be live. But I'll have to take a look at my schedule and see what I'm looking at. But probably those days. But if you're in the free Discord, you guys will see my schedule for what days I'll be live trading. And you guys will know what days I'll be in there sorting out the business. But if you guys want to know the best days to be trading, how to use the economic calendar, again, that's all going to be covered in the weekly newsletter that my team sends out, which are extremely insightful. Definitely recommend you guys using that, especially if you're still learning how to navigate the economic calendar, how to find the cleanest sessions. And those are things that are going to make your trading so much easier, right? Just as an example, look at last week's trading in your mind. Monday, Thursday, Friday, easy trading. Tuesday, Wednesday, absolute bloodbath. Why is that? Economic calendar. You gotta know how to use that. Shari, hi everyone. I trade NQ futures. Yeah, most of us do as well. You're in the right place. Slim Trady, hi everyone. Hi Dylan. Yeah, glad to have you, Slim. Silk, Dylan, you're amazing. Thank you for sharing so often now. Hope you're doing good. God bless. Thank you very much. Much more to come. Appreciate your guys' feedback. Love how you break down price action and navigate it. Thank you, Cyber. Much appreciated. A lot of time invested into this craft to get to that point. It's possible, but a lot of hard work to get to that point. Ali, your live was inspirational. Awesome. Thank you very much. I appreciate that. Thank you guys for all the awesome feedback. Appreciate your price action reading and good insights. Appreciate you guys very much. Quick pick on how you set up your journal and Notion would be greatly appreciated. Yeah, so in terms of my journaling and backtesting, I did do a video on that. But this weekend, I'm going to have to sit down and organize the video for the Notion template. I know you guys have been asking me for that. I did not forget. I will be doing that for you guys this coming week. And since I got July 4th, I'll have enough time because you guys got to think. I also got to balance the responsibility with those that have an obligation to that are working with me directly. So I'm doing my best to balance that out. But the Notion template, how I do my Notion from Sunday to Saturday, everything that's going in that will be shared with you guys here on YouTube this coming week. So you guys can look forward to that one. Could you do a video about risk management? Yeah, absolutely. Risk management, money management, all things I'm more than happy to talk about. Very important topics. Ian, thanks for the live last week. I appreciate the feedback. Glad it was helpful. Definitely going to do more of those. And Dylan says Forex Factory is NFP Thursday this week. Let me take a look at it. Yeah, now I'm confused with the economic calendar. Usually I look at it Sunday evening when I'm getting my schedule ready for the new day, or for the new week rather. But let me go ahead and pull that up right now. Oh yeah, very interesting. Yeah, so let me go ahead and share that here with you guys. Should be able to see that. Yeah. Yeah. So generally, like we were saying, NFP week's gonna be the first week of every month. So I did not see it on Friday, but yeah, we do have it on Thursday. Very interesting. Very interesting. So NFP week protocols. Okay, so now that it's NFP week, I'm just looking at the economic calendar for the first time here this week. Yes, I will be trading Monday, Tuesday. So NFP week protocol is actually Monday, Tuesday. I'm going to be trading, and then you guys can look forward to some killer YouTube content Wednesday through Friday once I get done with what I need to do on the mentorship side. So appreciate you bringing that to my attention, and thank you very much. I did not catch that. So yeah, NFP week this week. So NFP protocols. Silver Bullet Trader outlook on Bitcoin. Yeah, be happy to share that. Bank holiday on Friday, so NFP week on Thursday. Yes, sir. I'm seeing that now. Thank you very much for the heads up, guys. Good Sunday, Dylan and traders. Good Sunday to everybody. All right, guys. Appreciate you all joining. Let's get into the business here. Let's go ahead and start from, we'll take it from the monthly chart here on dollar. All right, guys. So reason we're starting with dollar, when you guys trade indices, why the hell am I even worried about dollar? Well, let's just go to the weekly chart so you guys can see the importance of understanding your higher time frames. So I don't need that one. All right, this is my NASDAQ trading templates in case you guys were curious as to what it looks like when I'm actually trading 15.5 1 minute, and then I got certain ranges on here that I'm looking at that are top secret. So let's go ahead and take all that off here, remove all the drawings. Let's just go up to the weekly chart because I want to highlight the importance of understanding risk on, risk off when the markets are moving symmetrically. So if you look at NASDAQ did what? Absolutely ripped higher last week, right into these equal highs there. Beautiful. Why was that? Well, because we saw dollar selling off, right? So when you have that risk on, risk off relationship, when the dollar is dropping, that's going to allow NASDAQ to rally. So when you have the bias on dollar, it makes it really easy to know what foreign currency is going to do and even stock index futures. So going up to the monthly chart again for dollar, everything's still heavy in this market. So I like this down close candle here. Looking at that as bullish order block, that was a target we had on the downside if the market remained heavy, which it has. Now working down into the weekly, we're now accelerating below that low. So from that gap, we were bearish into the midpoint of that wick into this low here, and now we're just completely melting down through that. So let me go and see what targets we have back here. All right, so we had this down close candle here that we were measuring the last week here as a draw, market drop down into it. So next draw I'd look for would be the 50% of that down close candle. So if we keep selling off, mean threshold or 50% of that down close candle would be a valid draw. And then if we keep just melting through that, then sell side here and sell side here. So these lows here would be the next draw on dollar if we keep selling off. All right, working down into the daily chart here. So we're watching this gap here last week. Wanted to see if it could act as an inversion gap because going into the week, if you guys remember last week where we were at with the United States getting involved in the Middle Eastern conflict between Israel and Iran, that gave the prospect for potentially higher dollar. We did gap open on Sunday, on Monday's candle. You can see here we did gap open, but then this gap did not act as an inversion gap, right? So what we wanted to see, if the market was going to be bullish last week, what we would have to see, right, would be the market get above this inversion gap, use it as support and rally, right? We did not do that, right? The market ended up, let's get a market replay here. The market ended up opening, slamming lower and closing below that gap. That's not bullish, right? So then the market worked lower for the sell side here and then accelerated down through that. So as right now, market still looks bearish. We're going to continue selling off on the daily chart likely, and we're looking for the downside targets that we gave here, which would be 97s and then the 95s. As long as we keep selling off. If we zoom out longer term, dollar is extremely heavy, very bearish. So nothing in terms of the technicals are confirming higher prices on dollar as of right now. So unless something crazy happens and we see the dollar just absolutely rip, I'm still looking for lower prices as long as we see what's in motion stay in motion. All right, let's go over to the bond market. Don't have my bond template pulled up, so let's go. This bond yield chart. All right, so bonds long term. I'm not going to spend a lot of time on this market. If we look at the monthly chart, again, we're still inside that nasty consolidation in the bond market, so there's just not a lot to work with here. Go back here. Jump in weekly chart. And then you can even more clearly see it on the weekly chart, right? The price action is just abysmal in the bond market, being held in a really tight range here. Zooming in. Really difficult price action while we're consolidating in here. So not much to look at on the bond market. I did like the bearish market structure we were seeing, but the market did not accelerate to the downside. So that's why I've been more neutral. And then I did want to watch this bearish breaker here, which was these consecutive down close candles. We did not respect that and sell off. We're actually starting to trade to it and through it. So right now I'm neutral on bonds. I don't have a strong conviction in this market, and it's because the market structure order flow is really sloppy in here inside this higher time frame range that we've been compressed in. And then you may be asking, why do we even look at bonds? Well, bonds determine what the currency is going to do, right? So if we see a down close on dollar weekly chart, then we're likely going to see a up close, right, on the treasury bonds, because they move inversely. They're inversely correlated, right? So if the treasuries are going higher, the interest rates are going lower. If interest rates are going lower, that means there's less demand for US dollars, so the dollar is going to drop. Before I get into indices, just want to let you guys know, if you guys do want to schedule a call with me, I think my team just told me how many do we have left. What are you doing here? Okay, so I was going to let you guys know we had a few spots opened up. I thought it was 4, but it's actually only 2. So if you guys want to book a call with me directly and get a free trading assessment, see where you're at in your trading, what's holding you back, what you need to get to the other side of that, book a call with me in the free Discord. And I think there's only 2 spots available. I thought it was 4 going into today, but I guess you guys are pretty fast. So if you guys do want to speak with me, schedule that call, fill out the form, and we're happy to get on a call with you guys to help you sort out where you're at, what you need to do to get to the next level. Dropping down to the daily chart here, not much on the daily chart to unpack again, just because we're still in that higher time frame range. If order flow remains bullish, then we have the buy side here, and then we have the body of the candle here, and then this high, and that's what I'd look for on the upside. But not putting a lot of weight in my analysis here because we got a lot of consolidation, and I'm just not really interested in trading markets that look like this. All right, so going right over to NASDAQ. Let's see, what are these templates here? All right, don't need that. Don't need that, and don't need that. All right. So weekly chart for NASDAQ. Last week, the key level I was using was this down close candle here, which is a bullish order block here. And then you can see last week we opened, we dropped down, we hit the upper quadrant. Very similar to gaps or imbalances. We don't want to see it trade in the lower half. We want to see it stay in the upper half. But that doesn't just apply to imbalances. It also applies to all the PD arrays. So because we have a bullish order block here, and if we want to see the market trade higher, we would want to see it stay in the upper half. And the fact that they dropped made the low of the week perfectly inside that upper quadrant. That's really bullish. That's telling you the market is very strong. If we sold off, then the targets would have been midpoint and then the gap here, but the market did not do that. We just ripped higher off the open, clear bullish order flow, so there was nothing to go short on. The market is aiming for these relatively equal highs here, right? Because we have buy side here and buy side here. And you may be asking, Dylan, that is 125 days ago. Who the hell has a buy stop here? Fund level traders, right? So fund level traders trade very differently than retail. Retail, we're in here intraday. Some of you guys are doing trade position trade, sure, but the fund level is mainly doing position trading, right? So they're looking for long-term swings. So above highs like that after a run, there's gonna be a lot of buy stops there from funds that are short with the buy stop there because they even have a retail mindset, right? So they see this as what? Strong resistance, right? Meaning the market should be bearish here because look, we hit it once, we hit it twice, and then it sold off. So this is a strong resistance level. And then you can see how nice of a resistance level that is as we bust through the door here. So first level delivered here. We still got that 871 level that I favor as a draw, which we'll likely see going into next week. Again, as long as nothing crazy happens. Order flow is still bullish, the market's strong, and nothing is changing in that regard. So we have equal highs here, looking for continuation. And a word of advice for you guys when we get into all-time highs here is just to keep trusting your buy models, right? So buy models is all you want to do at all-time highs. You don't want to try to fade markets that are just ripping higher. If we go to the continuous contract here for, let's look at S&P, it's the same thing, You do not want to be the guy trying to call a top in a predominantly bullish market, and a top meaning just trying to go short all the time. Are there opportunities where the market drops? Absolutely, right? However, look at how it trades when the market's going higher. It'll just keep going higher, right? Keep going higher, keep going higher, right? So don't try to fade that. Stay in line with higher time frame order flow. It will serve you very, very well, especially as we get into all-time high territory here pretty soon. All right, going back to NASDAQ here. All right, so we'll take off that weekly level. You can see where we made the low of the week there. That was really nice. All right, so we see here relatively equal lows taken out. And that's what really solidified the bullish bias for me this week. When we dropped below these lows and quickly rejected higher, that told me that this high here would be the draw. And then these equal highs here would want to be priced up into. So if we look at this entire price run here, we were bullish from all the way down here, looking for higher prices, just trusting buy models, looking for bullishness. And then if you see every inefficiency and every down close candle supported price, exactly what we did on Friday, right? What I mean by exactly what we did on Friday. Well, for those of you guys that were with me live, really easy read on Friday, 9:30, Judas in the sell side, and then just clear bullish order flow. And what allowed us to qualify that bullish order flow? Down close candle, bullish order block support, down close support, down close support, down close support, down close candle, use the support all the way up into our targets. That's an easy way to read order flow. If that's all you learn about order flow, it's more than enough. Of course, there's a lot more to it. There's a lot more precision elements you can have, but if you just look at that, it's going to keep you on the right side of the market. So that's an example of a 1 minute chart. But now let's go back up to the daily chart, and you guys can see how this is going to help you trust the bias, right? So we have the daily chart here. What do we see in this entire price run? Down close candle here, supporting price, right? Inefficiency here, support. Down close candle, support. Down close, support, right? Down close here, supporting price. And the market's just ripping. So you can trust bullish order flow as long as the down close candles are being supported, used to accumulate and send price higher. So really nice price run here. And then taking this even one step further, you don't need this to be profitable, but if you want more precision, it's available. If you look at the implied dealing range here, from where we see the price run is starting to where it's likely to go, when I drop down into a 4-hour chart, you can see how you can grade the price swing that's not yet delivered yet. And then you can see where they're going to accumulate, right? So you can see lower quadrant, sell stops taken, order block on the daily chart, accumulation to the lower quadrant. At 50% of the implied dealing range, consolidation, run lower for the stop. Smart money's going to buy that right there at 50%. In the upper quadrant, the implied dealing range, another stop run for more accumulation, and then the market delivers into the targets. That's how you grade a price swing that's not yet in price action, but you can grade it. How can you do that? Because we know where the market's likely to draw to, right? So if the price run is starting down here, we're expecting it to get up here. So you can grade the swing from this low to this high, and then you can predict where the PD arrays are going to form. Yeah, I just let that go on YouTube for free. That's good stuff. All right, so equal lows here, taken out, and then the market's ripping. When you're bullish and sell stops are taken, that's going to pour gasoline on whatever you're looking for. Let's look at an example here. So we have what? This swing low here, taken out, huge price run. This swing low here, taken out, huge price run. This low here, taken out, huge price run. This low here, taken out, big price run. So if you want to capitalize on the explosive runs, you have to wait for a run against what you're looking for. That's why when you see my trading intraday, what do I wait for at 9:30? The market to move against what I want to see. Because that's going to price in a key intermediate term low that then we're going to be able to ride up into our targets. It really is that easy. You just have to study it so that you can trust it yourself. So now that we're at all-time highs here, we have these equal highs here. Of course, we still have that 871 level that I like as the draw. But now in terms of upside targets, what do we have? Well, what I would look for just simply would be fib projections from this low to high. And there's more projections, but just to keep it simple here, let's go ahead and work with that. You can see how that -1 aligns there. And then if we keep ripping macro perspective, we can see NASDAQ at the 24,852s if we keep really accelerating to the upside. And then we can have other price targets as well. And then you may think, why this low to this high? Why this high to this low? It has to do with market structure, right? So if you understand your intermediate term highs, intermediate term lows, then it'll be really helpful in terms of targeting. So from this low down to this high, on the upside, I like the 23,000, let's call it 23,000 even. And then through that, we have 23,445, and those are all upside levels I'll be looking at using this swing here to project on the upside. You got to keep in mind when we're at all-time highs, there's no data here on the left side of the chart, right? That's one of the things I don't like as much about all-time highs, because you guys can see when we're trading inside the range here, like we have the sell side of the curve, we have all these data points here to refer to on the buy side of the curve, and it makes trading so much easier. When you're at all-time highs, though, there's no data on the left side of the curve, so you have to rely on mathematical projections using standard deviations on the upside. So that's what I'm doing to measure targets when we're at all-time highs. And again, as I already said, you just want to keep trusting buy models, looking for higher prices. You don't want to try to short it. When the top is in, it's going to be in, right? Very similar to, we'll go to NASDAQ here, right? Very similar to what we saw here, right? When the top is in, we're going to be able to write it down, right? So don't try to call the top, stay looking for higher prices. When the top is in, we'll see that and we'll be able to pivot accordingly. Alrighty, let's drop down to the hourly and then keep this moving. One thing I want to mention as well, a lot of you guys mentioned that price action was really easy last week, and I want to touch on a little bit of why. It has to do with what market profile you're in on the daily chart, right? So if you look at the daily chart here, what have we been in the past few weeks? Yes, the market's still grinding higher, but it's been a lot of range-bound consolidation action, right? And you can see that really clearly on the hourly chart here. So yes, there's absolutely still trade setups, right? There's still opportunities in this here. But you got to be a lot more mindful when the market's in a range like this, because it's not likely to be as clean. There's not going to be as many good setups. You have to get in, get out, and really know what you're doing. When the daily chart and the higher time frame is in an expansion profile, like we're seeing here, consolidation, expansion. When we're in expansion, trading becomes so easy because the higher time frame is actively reaching higher for levels. So when you see the daily chart is bullish, go long. Trust your buy models. What does that mean? Wait for a Judas at 9:30. Wait for a Judas at the right times of the day, and then ride the true move higher. So we see beautiful expansion here. And I was getting asked a lot, like, man, you know, usually it's like one good day, then one bad day, but every day almost was a good day, except obviously Tuesday, Wednesday, we had the Fed chair nonsense. And that's because if you look at the daily chart's in an expansion. So intraday, it's going to be super clean, explosive price runs higher. And if you look at all the best trade setups, they formed in line with the daily and the weekly chart. I took 2 trades on my live account this week and a couple trades on my prop firm, but one which was with you guys live on YouTube on Friday. All my setups of the 3 trades I took this week or 4 were all long. We're all looking for higher prices. And when you understand why that is, I want to be trading the easiest, best, most explosive price runs. That is going to happen in line with higher time frame institutional order flow. What that means is, where's the monthly, weekly, daily going? Bullish, clear as day. So when that's bullish, why are you trying to go short? Not that you can't go short, not that there's no short setups, but the easiest, most explosive runs are going to be in line with institutional order flow. That's how you find trades with institutional sponsorship behind them, is understanding where the higher time frame is going and focusing there. So I drill into that a lot because I know it's easy for you guys to see me on the 1-minute chart here, slicing and dicing, doing what I'm doing, but I want you to deeply understand that it doesn't come from the 1-minute chart. It's how I'm blending the lower time frame with the higher time frame, and that's how you get precision. All right, so dropping down to the hourly chart now that we covered that here. Nice little sell-off on Friday, sell side taken. So be interested to see if this can be a key low here and see if the market trades up into that 871 and beyond. And that's what I'm looking for. Again, just trusting buy models, looking for higher prices on indices. If we go over to S&P, S&P has still not reached its all-time highs yet. So that's going to be a draw for S&P. So if NASDAQ gets to all-time highs, then I would look for S&P to be a 6 sister and look to catch up, not S&P. I'm not saying this is an S&P divergence where S&P didn't make a higher high, NASDAQ did, the market's going to sell off. I'm not looking at S&P because the market's bullish, right? So I want to see S&P catch up to these highs here and reprice into that liquidity. So that's what I'll be using as a target Monday going into Tuesday for setups to work with intra-week on this non-farm payroll week, which is also a shortened week again. All right, so let's go ahead and cover the usual suspects here. We'll start with, let's start with crude oil. Really interesting on crude oil. Massive amounts of manipulation here. All right, so what I'm watching on crude oil now, they absolutely slammed this market lower on the back of everything that's been going on. So what I'm looking at now is this inversion gap here on the weekly chart. So now that we're back inside that range, I'd like to see us stay in the upper half. If we stay in the upper half, turn bullish, that's personally what I prefer to see, but with the wild levels of manipulation we're seeing here, I'm going to be more neutral right now, but I do want to see if that inversion fair value gap holds price. Then I will trust buy models. Let me take off back adjust. I will be trusting buy models going forward. Sorry, I had that labeled wrong because I had the back adjustment on. Sorry about that. So this is the inversion gap with back adjustment toggled off. So that inversion gap, we're now inside that now. I'd want to see that lens support. If we lose that inversion fair value gap, and this is the balanced price range here with a drop and then a rally. So this should support price if we're going to be bullish long-term for crude oil. That's what I'm going to be watching. So all eyes for me are going to be on this level. That doesn't mean I'm going long. It just means I'm watching how we trade there. And if we give bullish market structure in the lower time frame, then that's something I'll be able to work with inside of that key level. And as of right now, that's really the only thing I'm interested in crude oil. I don't want to go short this market. I am looking for higher prices actively, but a lot of manipulation given everything going on worldwide. And I mean, if you look at what they did on Monday, I mean, they absolutely slammed this thing 11, almost $12 a barrel lower. So high levels of manipulation. Be careful if you're trading crude oil, because with everything going on right now, it's going to be highly event driven and heavily manipulated. So make sure you're not over leveraged in crude oil. The other one is, what do we usually look at here? Bitcoin. Alrighty, so good old Bitcoin. So again, looking at the risk on, risk off relationship, because we have dollars selling off so strong, that's going to create a risk on scenario. So money's going to go into risk assets, Bitcoin being one of them. So strength in Bitcoin last week off that weekly gap here we're watching. Oops, there we go. So weekly gap here supporting price, indicating bullishness. So we're looking for higher prices as of right now on BTC. We do have buy side here, and then buy side here on the upside if we're going to remain bullish. We did drop down. We did clear the sell stops here. So now what I'll see is, does this act as a bullish breaker block here? And that's what it's going to have to be here. So this level here, we want to see this act as a bullish breaker. Highest up close, low, lower low, extend that through. It's already starting to act as support. It needs to continue from there, from the bullish breaker, if we're going to remain bullish on BTC. All right, guys, I think those are the usual suspects here that we covered. Let me look at the grains. Yeah, nothing interested in the grains for me just yet. I do think we're gonna have massive runs on the grains, but not in the cards yet. Not with this market structure. All right, guys. So what do you guys got for me here before we get going? Hey Joe, happy Sunday to you, man. Amy, if you haven't done so yet, can you provide the outlook for gold, silver, oil? So I think I touched on gold, oil, and this needs silver. All right, so looking at silver here, we talked about this last week being a breakaway gap. It's left the lower half open, which is exactly what we want to see in a breakaway gap. We don't want to see the lower half filled in. We have this bullish breaker here, and that's what these two black lines are denoting. So let me thicken that up a little bit so you guys can see that. All right, so we got these two black lines here. That is denoting the bullish breaker block here. We traded down into that, so it's a breaker with a fair value gap. That's a very strong algorithmic pattern. So we dropped down into that, using that as support. So as long as we remain bullish here, exactly as we expected for silver last week. So now that we dropped down, took out these lows, traded inside of that key level, we should see continued bullishness on silver. And because order flow is bullish, not trying to call a top on this market, we're looking for higher prices and looking for this thing to keep ripping. I'm not trying to call a bottom, or sorry, call a top. If we do lose this breakaway gap and trade all the way down through it, then I'll have to readjust my analysis and pivot. But for right now, I'm looking for higher prices on the metals. And then good old gold. I said retracement here on gold. I guess because it wasn't the end of the world, gold sold off. Let's see. Yeah, so we got this new 3-month candle. The quarterly candle is about to close here, about to open up a new one. So that'll be interesting to see how power of 3 plays out on the quarterly as well as the monthly here as well. So right now, I'm more neutral on gold. What I would watch here is this order block here. It's down close. I'd want to see, how we trade there going forward. I wouldn't prefer to see us lose this level. If we do lose that level, then we'll likely see a short-term correction on gold, which is reasonable, right? I mean, if we see what gold's done, I mean, it's absolutely ripped from the 1600s. So from the 1600s, absolutely vertical all the way to 3,000, almost 400, right? So almost 100% price running gold. So after seeing a huge run like that, it's reasonable for a small correction or a retracement. So we'll see how far they want to take it from there. But things been absolutely ripping, showing some signs of weakness right now. If we lose this down close, then we'll likely see a deeper correction on gold. Slim, so yes, we got a daily BISI. True that the daily SIBI probably won't get back down there if we're taking out that. Yes, yeah, let me get to that. So if you guys remember when we were live, and I'm speaking to those that are in the community, but I'll get you guys up to speed here. What do we have here? Consolidation, right? So because of the consolidation, what comes after consolidation? Expansion, right? So from consolidation to an expansion, we want to see this gap here be a breakaway gap, right? So you guys remember this week, we were not looking for anything short. We weren't looking for the market to drop down into the fair value gaps here, because simply the market is bullish. And when the market leaves a consolidation range, that's when you're going to see a breakaway gap. So we actually want to see this gap not traded into or filled in at all. So we don't want to see this repriced into, because it's the fair value gap leaving a consolidation from the transition from consolidation to an expansion. When that's the case, that's where you're going to see your breakaway gap. So while we could see a little bit of a retracement, Slim, that would be reasonable. This one here, we actually want to see that be a breakaway gap, because it's the first fair value gap leaving a consolidation, and those generally will not get filled in. But yeah, a retracement would be nice. So that retracement, I would limit it to just this fair value gap here, because this one we personally wouldn't want to see filled in. It can stab into it, would be the end of the world, just wouldn't be ideal. If we're going to remain really bullish, then we'd want to see this one just entirely left open, because it already consolidated here. So it's already a balanced price range. It doesn't need to trade back down into the inefficiency. This one here would be reasonable though. Can you do coin? Yeah, absolutely. Let's take a look. Yeah, so it looks like Coinbase, we got all-time highs. So 430 in sight for Coinbase, 430 a share. If we drop down to the weekly chart, they drop down, sell side taken here, fair value gap traded into, lower half left open. That's a breakaway gap here. Well, actually, no. So here's the breakaway gap. This is the measuring gap. So yeah, I like the 430 level. I like 430s on Coinbase. And then once we get there, it'll just be all-time high protocol. So you'll just have to keep using fib projections to reach higher. But for right now, like 430, that gives about $80 a share. So that's a good price run for right now. Yeah, so this thing's pretty bullish. I wouldn't want to stand in front of that. Dollar yen. Yeah, let's take a look at dollar yen. USD JPY. I don't like dollar yen. There's nothing for me to share on this market. It's consolidated right now. The debt market, and what you need to understand, there's a lot of things going on right now in Japan. In Japan, the debt market is not doing well. It's not healthy. I think people are starting to realize that this whole game of fiat, and fiat just means that we're using monopoly money, can't go on forever. And what people are starting to see in Japan is that, hey, the government is the biggest owner of bonds. That's kind of a problem because other people don't want to buy those bonds now. The government is the biggest owner of bonds. So that's going to create some distortions in the yen pair, and we're seeing that in the price action right now. So I have nothing on dollar yen because we're in a consolidation. This is not a market I like to call. Again, if I called markets in this, if I traded in markets like this, it would look like amateur hour. So I know where my models, where my analysis does really well and where it doesn't. And when the markets are in consolidation, I want to wait for that next displacement, right? Let me see if I can find an example here for you. Where's a prolonged consolidation? Perfect. Here we go. Right. So when the market's in consolidation like this, right, this is where the gamblers are going to be in there doing a whole lot. Just wait for it to leave it, because once it leaves the consolidation, trading just becomes so much easier. So when it's like this or like this here, right, just don't worry about it too much, because it'll be really difficult to work with. But then once we leave, now you can see it gets really easy, right? Fair value gap, bullish breaker, easy price run higher. It's easy trading. But when it's consolidating, it's going to be a lot more difficult. So right now, expect dollar yen to be difficult, and a little bit of fundamental reasons why is because of what I shared, I think, and that's weighing really heavily on investors. Because I think investors with deep pockets, they know all this shit. Like they're considering all these factors, and that's weighing heavily on the minds of investors, especially those that own bonds and the yen currency. Tyler, and because Friday is July 4th, yeah, so because it's July 4th, it looks like they moved the NFP to Thursday. Abraham, hello, boss. What's going on, brother? Good to see you, Abraham. I'd love to see you killing it, man. German 40? Yeah, got me all over the place today. Let's take a look at the German 40. Let's go to forex.com. Yeah, so German 40 is really going to be the same as the US indices. All-time highs, just keep trusting your buy models. Zooming in further, we had a really nice drop here. That price is in a nice low. And this now is a bullish breaker block here. Right? So we have a bullish breaker here. Let's make that another color. Let's do blue. I like blue. Bullish breaker block here with the fair value gap. Again, that's a powerful combination algorithmically. When you have that, it's a really strong algorithmic pattern. So we have this fair value gap here, extend that through with a bullish breaker. So we just dropped down into that. That's bullish. We found support there, exactly what you'd want to see inside this level. A nice swing low created. So the bias for candle number 4 is going to be expansion higher. And then we'll look for buy side here and then levels beyond. And you can take that straight to the bank for German 40. And then what we would have is like price targets, what I would use if I was trading this market. Because that's what you need at all-time highs. Use some fib projections, and then through this high, if we really see some speed above it, which is what we'd want to see, speed, then we can see the market get into the 25 to 25.5 level, and then beyond. All right, so that's German 30. Mahmoud, do you always enter at discount for long positions? Yes, I do not chase price. I always need to get a discount relative to where I'm at. The discount is relative to what time frame you're looking at, right? Like, so if a price run's already started, I can get in on a 15-second chart and still have it be a discount, right? So discounts all relative to where you're at in the price delivery continuum. And all that means, that's a fancy way to say price is fractal, right? So if price is fractal, that means the things it's doing on the higher time frame, it's doing on the lower time frame. So if you understand that price is fractal and that there's a price delivery continuum from the higher time frame to the lower, from the lower to the higher, you can actually go in and find discounts even when the market's already running in the lower time frames. But that requires a little more experience. But yes, I'm never chasing price. I'm always, for the most part, buying when the market's dropping and selling when the market's going higher. Smart money 101. You got to do the opposite of retail. Retail chases whatever the market's doing. Smart money's predicting, right? Just like what we did on Friday, right? Predicting the price run higher. Retail's going to see it run higher. They're going to chase the longs at the highs, and then they're going to get their face ripped off when the market drops like a rock. We are predicting price runs, again, not as much reacting to them. So absolutely, yeah, we always got to get a good entry. That's the most important thing, Mahmoud. Because if we're not getting a good entry, it means we're chasing price around, right? Can't be doing that. Joe, can you take a look at Apple? Yeah, let's take a look at Apple. Yeah, Apple's nasty in here. Apple's real ugly. It's in a consolidation. I'd wait for it to break out. Not that we're trading the breakout, but we want to see it break out at that range. Very similar to what I just covered with the yen pairs. Right, whenever the market's in a consolidation, it's going to be really difficult. Right, and if we zoom into this daily chart here, really tough to trade that. So what are we seeing now? Buy side building and sell side building. Wait for them to run one side, and then we'll be able to use that information for whatever the market's going to do after that, depending on how we leave that range. But right now, I don't have one side on Apple. I'm leaning bullish because indices are bullish. So when the overall stock market's going higher, that's going to drive up all stocks with it. Again, all stocks rise in high tide and drop in low tide for the most part. So because NASDAQ and S&P is bullish, I would favor higher Apple. However, it is in a consolidation. Really difficult to peg the market structure, the order flow, and this just isn't a market I have that. So if you look at the tools we've been learning over the past about year and a half of us working together, Joe, when the tools jump out to you really easily, right, like NASDAQ and S&P, that's an easy market to trade. But when it's not clear to you and it's not obvious with the tools that we use, then that's probably the surest sign that it's going to be a low probability market condition for the time being. James, I'm late. Have to start fresh? No problem, man. That's why we got the recordings uploaded. No worries. Slim, yeah, right. True. Awesome. Carter, hopefully not too dumb. Nah, not a problem at all, man. One of the things I always say is no such thing as a dumb question, only an unanswered one. I do a lot of analysis on NQ1, the continuous, and seeing you charting on the NQ5 on what should I be charting. Yeah, always use the official contract. Always use the official contract. So NQU here is what you want to use. Why is that? So for those of you guys that were live trading with me on Thursday in the community, look at this level here, and we'll make that pink just so it stands out. And this level here, right? That's small volume imbalance. You may say, wow, that's a really small level. But if we go to the continuous contract, you're going to see that volume imbalance isn't there. It doesn't exist. But when you go to the continuous contract, it does exist. Now let's look at these two little pink lines on a 1 minute chart. Look how it makes the low on Friday. But let's go to Thursday when I was actually using this level here. When we went long on Thursday, that was our drawn liquidity, that volume imbalance. Right? So you can see how that gap it's really influential on price. And then another one to further drive this point home. Look at the liquidity void here. Go. Zoom in here. This range here. And I'm going to extend that all the way to the right so you guys can see that. So look at that void here. It's a void because there was no trading inside this gap here. So now we're going to extend that through. And then you're going to see that blue rectangle. Now I want to show you on the 1 minute chart. Look at how on Thursday, right, that was the drawn liquidity, right? Like we were looking for the market to trade higher into that liquidity void on the daily chart. And then if you look at how it uses it, here, let's get that midpoint on there so you guys can see where the precision comes in. So when we made the low of the day at 9:30, which you guys don't see, when I'm live trading or I'm screen sharing, I'm trading on a clean chart. However, what you don't see is I have all these annotations across different layouts. So what I'm looking at when we were dropping at 9:30 on Friday, I'm using simple gap theory. And if you don't know what gap theory is, it's really simple. If the market's bullish and we're below a gap, it's going to get above it, use it as support, and rally. If we're above a gap and we're bullish, right, it's just going to simply use it as support and rally. If the market is bearish and we're above a gap, it's going to get below it, use it, and sell off, right? That's simple gap theory. So what were we on Friday? Were we bullish or bearish? Obviously bullish, right? So when we drop down into a gap, I'm wanting to see it use as support. And it's not random that we made the low right there at the midpoint of that level. So why am I bringing that up? Those inefficiencies aren't on your continuous contract, but the algorithm is going to refer to it. So I recommend always use the correct contract and you'll have all these levels. You won't have to worry about any confusion and you'll have all these levels that you'll need in your analysis because the algorithm is aware of these levels. It is using those levels. And if you're using the continuous contract, it's not going to be the same. It's not going to line up. So you're going to be missing a lot of critical information. And if you're putting serious money on the line, you don't want to mess around with the wrong information. So I would always recommend use the official contract month. It'll remove all the confusion. And the reason I wanted to go with a bit of a longer answer is because I'm sure a lot of people have that same question as well. If you're already using the NQ1 and you're making money and it works for you, sweet, right? That's awesome. This is what works for us. Hopefully that makes sense, Carter. Lyndon, hey bro, much love from South Africa. Can you do US 30? So glad I came across your channel. Would love to join your private community soon. Yeah, would be glad to have you. Let's take a look at the Dow 30. Yeah, so Dow's still got a bit of a ways to catch up here, to catch up to NASDAQ and S&P. So I'd look for Dow to act almost like a six sister and really start to catch up. I like this high here for Dow. So we're probably going to see Dow really rip this week simply because it hasn't reached that high yet, right? So if you see like NASDAQ, for example, it's already up here. S&P is already really close to it. Dow isn't even close. So Dow's likely going to be a six sister and look to catch up. First draw would be this high here. Let's go up to a weekly chart. Yeah, so that high there I like. And then these highs back here. With these bodies are relatively equal, that could be a draw, like it's a rejection block. You can use that. So that would just be the highest body here. Like if you wanted another target, you could use that here. So that's what I would look at on the upside. So I'm seeing this consolidation, expansion, and this thing should absolutely rip going into the new week. What do I have to buy to get real-time NQES data feed not delayed? I think it's $7 a month. I think it's $7 a month. It's just a subscription for live data. I think you go into TradingView. I'm not entirely sure how to do it. I think if you click here, you can go to, I think, yeah, you go to home, and then like you can go to billing, and then you can find the data subscription. If you just look it up on YouTube, it should give you a pretty simple breakdown. Alrighty. Going on 153. All right, go ahead and do a couple more. Amazon. Yeah, let's take a look at Amazon. AMZN. Yeah, so it's gonna be the same thing. Looking for higher prices on Amazon. Amazon's pretty clean, and because we have bullish indices, right, the index futures, that's going to be really bullish for the respective stocks. So I look for higher prices on Amazon, closing this entire gap, and then if we can get above that gap, use it to support all-time highs for Amazon. And then Google lagging behind a little bit, but it looks like it's trying to catch up. So I'd look for bullishness and higher prices on Google as well. Josh, good to see you're doing well. Thanks, Josh. Carter, man, thanks for that info on using the current contract. Been using your videos big time. Looking forward to join the mentorship to deepen my accountability. Thanks. I'm more than happy to do that. You let me know when you're ready to get to work, Carter, and we'll sort it out, man. Tyler, 100% worth investing your time in. Appreciate it. Just so you guys know who that's coming from a gentleman who just took about $15,000 in payouts over the last couple months. So if you invest in the right education, you can absolutely make serious fucking returns doing this, but you got to be willing to put in the work, right? Even if you're working with me, you're still going to have to work your ass off, but at least you'll know you're going to get successful. Thanks, Dylan. Yeah, my pleasure, Joe. Will, thanks. Yeah, absolutely. Slim. Awesome, guys. Been my absolute pleasure here with you guys. Hope someone was insightful. I will see you guys on the next one. We'll see about doing a live session here this week. I'll see what my schedule looks like. But if not next week on this shortened week, then we'll see what we'll do the week after that. Hope this one was insightful. If it was of value, hit the like button on your way out. Greatly helps us out. And I will see you guys on the next one. Take care. Stay safe. Have a good rest of your Sunday, everyone.